Hello everyone! Usapang REITs ulit tayo in today's video. I'll be sharing my updated review and analysis sa tatlo pang office REITs, ang DDMPR, MREIT, and RCR. Meron akong separate video for AREIT, PhilREIT, and VREIT. So watch nyo na lang ang previous videos ko if you haven't watched them yet. We will look at the past and latest performance and what is expected for their future growth para malaman natin if worth it ba mag-invest sa mga office REITs na ito, lalo ngayong bumababa ang price. At the end of this video, you should be able to have an idea kung alin sa mga office REITs na ito ang pwede mong ilagay sa watch list mo. Let's start with DDMP REIT. Ang stock code is DDMPR at ang REIT sponsor is Double Dragon Properties. DDMPR's property portfolio consists of office towers with retail components in DD Meridian Park. Ang DD Meridian Park is the company's flagship project. Located siya sa prime location right at the forefront of Pasay City's Central Business District in the Bay Area of Metro Manila. Meron silang 4.75 hectares of prime office and commercial block. At ang kanilang top REIT holding ay ang Double Dragon Plaza. Ang Double Dragon Plaza is LEED Gold certified and currently houses two government agency headquarters, PEZA and TIEZA. LEED stands for Leadership in Energy and Environmental Design. LEED certification is a globally recognized symbol of sustainability achievement and leadership. Sa price history and performance, malaki ang ibinaba ng price ng DDMPR since nag-IPO noong 2021. Ang IPO price ay 2.25 pesos per share at ang price as of December 11 ay 1.19 pesos per share. So down ng 47% ang price since nag-IPO ang DDMPR. Ang 52-week low ay 1.15. So, malapit sa 52-week low ang price ng DDMPR sa ngayon. May pag-asa pa kayang tumaas ulit ang price ng DDMPR? Let's find out. In terms of financial performance, growing ang revenue ng DDMPR since nag-IPO noong 2021. However, if we look at the earnings dito sa chart, lumalabas na mas mataas ang earnings ng DDMPR versus its revenue. DDMPR has a high level of non-cash earnings. Since walang breakdown sa Simply Wall Street na data, so I checked the financials sa Morningstar to understand kung saan galing ang non-cash earnings ng DDMPR. And based dito sa data ng Morningstar, yung non-cash earnings ng DDMPR ay galing sa fair value gain from their investment properties and other non-operating income. So, investment income siya. DDMPR owns the land na kinatatayuan ng mga buildings nila, kaya malaki ang fair value gain nila sa kanilang investment properties. Ito naman ang kanilang EBITDA. EBITDA stands for earnings before interest, tax, depreciation, and amortization. EBITDA is a useful tool in evaluating the company's operating performance and its ability to generate cash from its operations. Since REITs are required to distribute 90% of their earnings as dividends, it's also important to understand the cash flow generation of the company. Sa EBITDA, gusto natin positive and better if growing. Strong EBITDA can provide more resources for reinvestment or expansion to enable potential growth opportunities. Sa free cash flow naman, positive and growing ang free cash flow ng DDMPR. Free cash flow helps assess whether a REIT generates enough cash to sustain and potentially grow dividends. Ito ang gusto ko sa DDMPR. Healthy ang kanilang balance sheet. So wala silang utang. Zero ang debt to equity nila. And meron silang 340 million of cash. In terms of dividend distribution, tumaas ang dividend per share ng DDMPR since nag-IPO noong 2021. Malaki ang dividend growth from 2021 to 2022, pero medyo bumaba noong 2023. For 2023, nakakatatlong payouts pa lang sila. Mataas pa rin naman ang dividend yield ng DDMPR kasi bumababa ang price. Ang dividend cash payout ng DDMPR ay more than 100%. So DDMPR's dividend payments are not well covered by cash flows. So watch out ito for DDMPR. Future growth potential ng DDMPR. Yung fourth phase of DD Meridian Park comprising of over 300 luxury serviced residences. Ito yung Ascot DD Meridian Park has been completed and it is expected to be operational and begin to generate recurring revenues by 2024. Abang-abang muna tayo dito and hopefully makarecover ang price ng DDMPR. In terms of valuation, ginagamit ko ang asset play valuation method sa mga REITs. Ang criteria is buy when stock price is below its book value. Currently, DDMPR is trading below its book value. Ang kanyang price to book ratio is 0.4, so undervalued ang DDMPR. Ang buy below price ko for DDMPR is 1.28 pesos per share. Next, pag-usapan naman natin ang MREIT. MREIT's portfolio consists of 14 buildings with a combined GLA of 324,724 square meters in core business districts and PEZA registered zones. Ang kanilang assets are located in the townships of the sponsor, which is Megaworld, specifically McKinley Hill in Taguig City, Eastwood City in Quezon City, and Iloilo Business Park. Average occupancy rate of MREIT is 95%. MREIT has diversified blue-chip tenants comprised mostly of sticky tenants such as BPOs and traditional office. Sa tenant mix, majority nila ay BPO, nasa 77%, and 17% traditional. Meron din silang konting retail and hotel. Ang top 10 tenants nila ay nag-occupy ng 46% ng GLA nila. In terms of price performance, bumaba din ang price ng MREIT. Ang IPO price is 16.10 pesos per share at ang price as of December 11 ay 12.10 pesos per share. So, down ng 24.8% since nag-IPO. Ang 52-week low is 11.54. Sa ngayon ay malapit ang price sa 52-week low. In terms of financial performance, revenue has grown significantly since nag-IPO noong 2021. Plus 150% siya from 2021 to 2022. MREIT's EBITDA is also strong, driven by significant growth sa kanilang revenue. MREIT's free cash flow is positive and has been growing din since nag-IPO noong 2021. Healthy din ang gross margin ng MREIT above our target of 70%. A higher gross margin indicates better profitability and efficiency in managing properties. MREIT's balance sheet is also healthy. Mababa lang ang kanilang utang. Ang debt-to-equity ratio nila is 13.1% with 1.75 billion pesos of cash. Below 50% debt-to-equity ratio is considered healthy. In terms of dividend distribution, stable ang dividend per share ng MREIT. So, steady lang siya, hindi siya masyadong tumaas, pero syempre mas gusto natin pag tumataas sana ang dividend per share. And sa ngayon, mataas ang dividend yield for December payout kasi bumababa yung price kaya mataas pa rin ang dividend yield. Ang kanilang dividend cash payout to shareholders ay healthy, 80% lang. Ang kanilang dividend payment is well covered by cash flows. So, kaya nilang i-sustain ang mataas na dividend. MREIT is committed to double its portfolio GLA from its IPO to 500,000 square meters by 2024. MREIT still has a lot of potential acquisition opportunities. MREIT has the longest growth runway given Megaworld's portfolio of more than 1 million square meters of PEZA accredited office space. In terms of valuation, MREIT is also trading below its book value. Price to book ratio is zero point 0.6. MREIT is undervalued. At ang buy below price ko sa MREIT ay 12.2 pesos per share. Next is Robinsons Land Commercial REIT. Ang ticker code is RCR. RCR's portfolio consists of commercial spaces primarily leased for office purposes. RCR has aggregate portfolio GLA of 480,479 square meters as of December 2022. So yung properties nila are PEZA accredited and they have high occupancy rates and earning stable rental revenues. Ang average occupancy rate nila is 98%. And majority of their tenants belong to various IT business process management industries. Currently, they have 16 assets located in 10 cities across the Philippines. Among all the office REITs, RCR has the most geographically diversified portfolio. This geographical diversification minimizes concentration risk. In terms of price performance, bumaba rin ang price ng RCR since nag-IPO noong 2021. Ang IPO price is 6.45 pesos per share at ang price as of December 13 ay 4.7 pesos per share. So down din ng 27% since nag-IPO. 52-week low is 4.55 pesos per share. Malapit sa 52-week low ang price ng RCR sa ngayon. RCR's revenue has significantly grown since nag-IPO, plus 161%. As a result, RCR's EBITDA is also strong. Ang free cash flow naman ng RCR is also growing and positive din. And healthy rin ang kanilang gross margins. Super healthy din ang balance sheet ng RCR. Wala silang utang, so zero debt to equity and with cash of 1.75 billion pesos. Sa dividend naman, steady ang dividend ng RCR and consistent sila sa dividend payment schedule. Tumataas ng konting-konti ang dividend per share. Mataas din ang dividend yield. Bumababa kasi ang stock price kaya mataas ang dividend yield. So maski hindi masyadong tumaas ang dividend per share ng RCR. Dividend cash payout to shareholders ay 84% lang. RCR's dividend payments are well covered by cash flows. RCR has an excellent expansion pipeline kasi meron siyang full support of its sponsor, Robinsons Land Corporation. So meron siyang access to over 400,000 square meters of gross leasable area for acquisition in the future. In terms of valuation, RCR is also trading below its book value. Price to book ratio sa ngayon is 0.9. So undervalued din ang RCR. At ang buy below price ko for RCR is 4.88 pesos per share. Here's an update naman sa aking REITs portfolio that I started building this year, no July. As of December, total amount invested ko is 478,710 pesos. Market value now is down by 3.2%. Ang aking estimated dividend per year ay 35,277 pesos. So that's around 2,900 pesos monthly sa pagganitong amount yung na-invest. I'm using Simply Wall Street to track my investment portfolio. So if you are interested, I'll put the link below para makapag-sign up ka for a free account. Sana makatulong ang video ito sa iyong investing journey. Pa-like and share na rin para marami pa tayong matulungan.